Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of August 19th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not good news for mortgage rates. Mortgage bonds sold off all week on positive economic news. If you look at the bond chart on the screen, you can see Monday bonds tried to make a run at that blue falling trend line we've been talking about. They returned lower, and then they sold off on Tuesday, Wednesday, Thursday, and into Friday. So just a bad week for mortgage rates, because as the bond market sold off, mortgage rates moved higher. So we had a slew of economic reports that were good. Now on Friday, the bond did bounce off a low and close a little bit higher. It was still down for the day, but it looks like it may have found the bottom and bounced off. So we are going to recommend floating your Delaware mortgage interest rate to start the week to see if bonds can recover some of that loss that they had last week. Now, if bonds turn negative again and sell off, we would quickly switch to a locking stance, because they have a long way to fall if they break through this level of support. So stay tuned for that. Let's break down some of these positive economic news. In economic news, the big report last week was on Thursday when the weekly initial jobless claims came out. And that showed jobless claims dropped by 15,000 claims to 320,000 claims. That was great news for the labor market, and that's the lowest number of claims since October 2007. Now, the reason why mortgage bonds didn't like that so much is if we have too much good economic news, then the Federal Reserve in its September meeting will probably start the bond tapering process, where they stop buying as many mortgage bonds. They're buying $85 billion a month right now. So if they stop and start slowing down that tapering program, that's bad news for bonds. Mortgage rates will spike up. So any hint of good news of them starting that tapering program is going to affect the bond market now and will move rates up. Okay, and that was a big difference, because 320,000 claims versus 339,000 expected, so big difference there. We also saw the release of retail sales report for July 2013, which showed a fourth straight month of retail sales growth of 0.2%. If you strip out auto sales from the report, then it rose by 0.5%. This, again, was another favorable economic report, which was not bond friendly. We also saw two measures of inflation last week. The Consumer Price Index, which is the CPI, rose by 0.2%. Measure of inflation for July 2013. Year over year, it's about 2%. Now, if you look at the core CPI, which is what the Feds use to measure, that again rose by 0.2% for July. And year over year, it's at 1.7% inflation. That's very low inflation, below the Fed's target market of 2%. So there's no concern there on inflation. In housing news, again, good news in housing. We saw housing starts rose by 5.9% from June 2013 to July 2013 to 896,000 units for the year. So housing starts mean people decided to start building a home even though rates have gone up. So that's good news for housing. It's showing that higher interest rates have not slowed the housing recovery. We also saw the building permits for July were up 2.7%. To 943,000 units annualized, and that was above the expected 934,000 units. Now, that's good news, because building permits fell by 6.7% in June, so that's definitely good news for July. And then the National Association of Home Builders Housing Market Index rose to 59 in August, which was up from 57 in July, and that's the best level in 8 years. So all in all, housing market is doing great. Home prices are expected to appreciate for 2013 from 10 to 13%. So we had a great appreciation in 2012. We were looking at about 12%. So home prices are moving up. Now's the time to buy. If you wait, homes are going to cost more and interest rates are moving up. We're still on this long-term trend of rates moving up. Now, day to day and week to week, they kind of bounce around, but the overall trend is for rates to keep moving up. So get in now, lock your rate, get under contract. In the local news, the next free first-time homebuyer seminar is in Dover, Delaware, and that is Saturday, August 24th. That's at the Holiday Inn in Dover, and that is from 10 a.m. to noon. And the next one in Newark is Saturday, September 14th. That's in Newark, Delaware, at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.